Hi everyone, welcome back. Now in this lecture, we're going to start solving questions from Ind AS 36, which is impairment of assets. Let's start with illustration number 1. Okay, now let's read illustration 1. The carrying value of a building in the books of Sun Limited as at 31st of March 2021 is rupees 300 lakhs. So there is a building that Sun Limited would have purchased a few years ago. Let us assume that the Sun Limited purchased this building at 500 lakhs. Now it has used the building for X number of years and it has charged a depreciation on such building to the tune of 200 lakhs. So historical cost was 500. It charged depreciation for 200 lakhs and therefore the carrying amount of the building or the book value of the building as at 31st of March 2021 is 300 lakhs, which is historical cost less accumulated depreciation of 500 less 200, which is equal to 300 lakhs. As at that date, the value in use is 250 lakhs and fair value less cost of disposal is 238 lakhs. Remember, value in use basically represents the present value of the cash flows that an entity is expected to receive by using the asset. All right. Look at the word use. All right. So what is the value that Sun Limited will actually be able to generate by using this building, by continuing to use this building? Let us say this building is a factory building. All right. So by continuing to use this as a factory building, the value in use or the amount of cash flows that Sun Limited is expected to generate is equal to 250 lakhs. So value in use represents the present value of the cash flows that an entity is expected to generate from continuing use of the asset. We then have fair value less cost of disposal as 238 lakhs. What 238 basically represents is if Sun Limited goes to the market and it sells this asset today, all right, let us say Sun Limited is selling the asset today, Sun Limited will be expected to generate net sale proceeds of 238 lakhs. Why am I saying net sale proceeds? Because out of the total sale proceeds, Sun Limited will have to also incur certain costs. Let us say maybe you'll have to pay some legal fees, brokerage costs, and so on and so forth. So fair value less cost of disposal basically represents how much are you expected to receive upon selling less any cost that you're going to incur to sell the asset. So fair value less cost to disposal is almost similar to NRV for inventory. What we see as NRV for inventory, that is almost the same as fair value less cost of disposal. If you sell the asset today, what are the net sale proceeds that you're expected to receive? That is 238 lakhs. The question is saying calculate the recoverable amount. So now let's actually start solving it. Okay, let's start with step number 1, which is calculation of recoverable amount. Recoverable amount is calculated as higher of value in use and fair value less CTD. All right, so we compare value in use and fair value less CTD. Whichever is higher, that will be regarded as the recoverable amount. So value in use in this question was rupees 250 lakhs. Fair value less cost to disposal is 238 lakhs. So the greater of the two will be recoverable amount. So in this case, recoverable amount is going to be equal to 250 lakh rupees. What is the meaning of this recoverable amount? It basically represents the benefit that we are expected to receive from the asset. All right, the benefit that we are expected to receive from the asset is 250 lakhs. How did we arrive at this? We compared value in use and fair value less CTD. Whichever was greater is being regarded as the recoverable amount. The question actually required us only to calculate recoverable amount, but let's actually go one step ahead and also calculate the impairment loss. All right, so let's do step number 2, which is calculation of impairment loss. Now think of it. The carrying amount of the asset in the books is 300 lakhs. In the books, the asset is reflected at 300 lakhs, but we are saying that the benefit that we are expected to receive is only 250 lakhs. It's appearing in the books at 300, but the benefit that we are expected to receive is only 250 lakhs. All right. So obviously what Ind AS 36 requires us to do is bring down the value of the asset, bring down the book value of the asset from 300 to 250. All right, your assets are currently overstated. So bring down the value of the asset from 300 to 250, and you're going to bring that down by recognizing an impairment loss. All right. So the books are currently overstated. The assets in the balance sheet are currently overstated because you're reflecting an asset at 300 lakhs, whereas the true benefit that you're going to receive from the asset is only 250. Therefore, we are going to bring down the value of the asset from 300 to 250 by recognizing an impairment loss. All right. So impairment loss is calculated as carrying amount less recoverable amount. All right. Impairment loss is calculated as carrying amount less recoverable amount, which is equal to 300 lakhs less 250 lakhs, which will be equal to rupees 50 lakhs of impairment loss. All right. So we are going to recognize an impairment loss of rupees 50 lakhs. All right. The asset was appearing in the balance sheet at 300. We want to bring it down to 250 because that is the benefit that we expect to receive. And hence we are recognizing an impairment loss of 50 lakh rupees. All right. Now let's actually also see the journal entry for this. All right. Let's also see the journal entry for this. So step number 3 is journal entry. What we are going to do is we are going to debit impairment loss, which will be a P&L item. We will be debiting impairment loss, just like how depreciation is reflected in the P&L. Impairment loss is also reflected in the P&L. So impairment loss debit to asset 50 lakh rupees. All right. So by crediting the asset, what we are doing is we're reducing the value of the asset. The asset's book value was 300 lakhs. We're now crediting the asset by 50 lakhs, and that is going to bring down the value of the asset in the books by 50 lakh rupees. All right. Crediting the asset is basically going to bring down the value of the asset by 50 lakh rupees. Alternatively, you can also have another entry, which would be impairment loss debit, which will be a P&L item, and you can credit accumulated impairment. Instead of crediting the asset, we can credit accumulated impairment. Just like how we credit accumulated depreciation, over here also we can credit accumulated impairment. All right. And just like how accumulated depreciation is shown as a reduction on the asset side, we show accumulated depreciation as a reduction to reflect the net book value of the asset. Same way, accumulated impairment will also be reflected as a reduction on the asset side. All right. So on the asset side, on the balance sheet, ultimately what gets presented is historical cost less accumulated depreciation less accumulated impairment. All right. So what will finally get reflected on the balance sheet will be historical cost less accumulated depreciation less accumulated impairment. All right. So that is with regards to step number 3, which is the journal entry. Let's also do step number 4, which is calculating the carrying amount of the asset after we recognize impairment loss. The question gave us the carrying amount of the asset as 300 lakh rupees, but that was the carrying amount before we recognized any impairment loss. Let us now also actually see what the carrying amount of the asset would be after recognizing impairment loss. All right. I am calling that as the revised carrying amount. All right. The revised carrying amount or carrying amount after recognition of impairment loss. Revised carrying amount is going to be equal to the original carrying amount, which basically represents the carrying amount before recognizing impairment loss less impairment loss. The original carrying amount was given in the question as 300 lakhs. We recognized an impairment loss of 50 lakhs, and therefore the revised carrying amount is equal to 250 lakh rupees. All right. In the books, before we recognized impairment loss, the carrying amount of the asset was 300 lakhs. We recognized an impairment loss of 50 lakh rupees, and therefore we are left with a final carrying amount or revised carrying amount of 250 lakhs. So the asset was originally reflected at 300. We reduced it and brought it down to 250 lakhs, and this 250 lakhs is also equal to the recoverable amount itself. It's also equal to the recoverable amount itself because we calculated impairment loss in such a way that the asset comes down to its recoverable amount. All right. We calculated the impairment loss in such a way that the asset's carrying amount comes down to its recoverable amount. So the revised carrying amount is equal to the recoverable amount of 250 lakh rupees. All right. So when you prepare the balance sheet, what will finally get reflected on the balance sheet will be this 250 lakh rupees. What will get finally reflected on the balance sheet is 250 lakhs, which represents the carrying amount of the asset after impairment loss. And in the final P&L that we prepare, we will see an impairment loss expense as 50 lakh rupees. Just like how depreciation is shown as an expense in the P&L, we will also show impairment loss as an expense in the income statement. All right. So these are the 4 steps. All right. We first calculated the recoverable amount. We then calculated the impairment loss. We saw the journal entry for the impairment loss, and then we calculated the revised carrying amount after recognizing impairment loss. All right. Revised carrying amount after recognizing impairment loss will be the original carrying amount less the impairment loss that we recognized. Let's quickly see the institute solution. The institute solution is restricted only to the calculation of recoverable amount, which is equal to rupees 250 lakhs. All right, with that, we're done with illustration 1. All right, now let's do illustration number 4. Jupiter Limited, a leading manufacturer of steel, is having a furnace which is carried in the balance sheet on 31st of March 2021 at 250 lakhs. All right, so there is an asset which is a furnace. In the previous example, that asset was a building. Over here, the asset is a furnace, which is carried in the balance sheet on 31st of March 2021 at 250 lakh rupees. So this 250 lakhs basically represents historical cost less any accumulated depreciation that has been charged until 31st of March 2021. Let us say this asset was purchased 5 years ago. You would have purchased it at some price, let's say of 400 lakhs. For the last 5 years, you charged the depreciation of 150 lakhs. All right, so 400 less 150 is equal to 250 lakhs of carrying amount as at 31st of March 2021. As at that date, the value in use and fair value is equal to 200 lakhs. The question is saying that both value in use and fair value are actually equal to 200 lakhs. Cost of disposal is given as 13 lakh rupees. The question is calculate the impairment loss to be recognized in the books of the company. All right. So let's start with solving illustration 4 now. Step 1 remains the same, which is calculation of recoverable amount. Recoverable amount is higher of value in use and fair value less cost to disposal. Value in use is given as rupees 200 lakhs. Fair value and cost to disposal are given separately. Fair value and cost to disposal are given separately. Fair value is also equal to 200 lakhs. You have less cost to disposal of rupees 13 lakhs. So fair value less CTD is going to be equal to 187 lakhs. All right, the fair value is equal to 200 lakhs. You were given additional information of CTD, which is equal to 13 lakhs, and therefore fair value less CTD is equal to 187 lakhs. In the previous illustration that we did, the question gave us directly FV less CTD as 238 lakhs. The question gave us FV less CTD directly. Over here, we are required to calculate FV less CTD. They gave fair value separately and they gave cost to disposal separately, and we have calculated the FV less CTD as 187 lakhs. Therefore, recoverable amount is going to be the higher of value in use or fair value less CTD, which will actually be equal to, in this case, at 200 lakhs. So recoverable amount is actually equal to 200 lakhs. Recoverable amount represents the amount of benefit that we are expected to receive from this asset. All right, let's move on now to step number 2, which is calculation of impairment loss. Impairment loss is calculated as carrying amount less recoverable amount, right? Carrying amount in this case was 250 lakh rupees. The carrying amount was equal to 250 lakh rupees. Recoverable amount was equal to rupees 200 lakhs. We calculated it at 200 lakhs, and therefore we again have an impairment loss of rupees 50 lakhs. All right, so we have an asset in the books. The asset's carrying amount is equal to 250, but the benefit that we expect to receive is only 200. Therefore, I bring the carrying amount from 250 to 200. I bring the carrying amount down from 250 to 200 by recognizing an impairment loss of rupees 50 lakhs. The journal entry, I'm not going to repeat it. It's the same as what we saw earlier. It'll be impairment loss debit in the P&L of 50 lakhs, credit either asset or accumulated impairment. You can either credit asset or you can credit accumulated impairment. So that is with regard to calculation of impairment loss. Let's also calculate the revised carrying amount. I'm skipping the journal entry. The journal entry is going to be the same. The revised carrying amount will be equal to the original carrying amount less impairment loss. The original carrying amount was equal to rupees 250 lakhs less impairment loss of rupees 50 lakhs. So that is equal to rupees 200 lakhs. All right. So the assets carrying amount originally was 250. I recognized an impairment loss of 50 lakhs, and therefore the revised carrying amount is equal to rupees 200 lakhs, which is equal to the recoverable amount itself again. All right. And this is the final value that will be presented on the balance sheet. When you prepare the final balance sheet for 31st of March 2021, the amount that will be reflected on the balance sheet will actually be equal to 200 lakhs, and your P&L will actually have an impairment loss of 50 lakh rupees recognized. That is with regards to illustration number 4. Let's actually quickly see the institute's solution as well. So it's calculating the recoverable amount as 200 lakhs and impairment loss is calculated as 50 lakh rupees. Okay, now let's solve illustration number 13. Venus Limited has an asset which is carried in the balance sheet on 31st of March 2021 at 500 lakh rupees. So the carrying amount is equal to 500 lakhs. As at that date, the value in use is 400 lakhs and fair value less cost to sell is 375 lakhs. All right, so the value in use is 400 and fair value less cost to sell is 375 lakhs. From the above data, calculate the impairment loss and prepare the journal entries for adjustment of impairment loss. All right, so it's asking us to calculate the impairment loss and also the journal entries. So let's start with step number 1, which is calculation of recoverable amount. Recoverable amount is going to be, again, the higher of value in use and fair value less CTD. Value in use is given as 400 lakhs and FV less CTD is given as rupees 375 lakhs. Let me just check if the numbers are right. Value in use is 400 and FV less CTD is 375 lakhs. Therefore, recoverable amount will be equal to 400 lakh rupees. All right, so this is the expected benefit that I'm going to receive from using the asset. Step number 2 is going to be calculation of impairment loss. Impairment loss is calculated as carrying amount less recoverable amount. Carrying amount is given as rupees 500 lakhs and recoverable amount has been calculated as rupees 400 lakhs, and therefore we have an impairment loss of rupees 100 lakhs. All right, so we have an asset which is reflected in the balance sheet at 500 lakhs, but the expected benefit is only going to be 400 lakhs. Therefore, I have to bring down the value of the asset from 500 to 400 by recognizing an impairment loss of rupees 100 lakhs. All right, the question also specifically asks for journal entries. So I'm quickly just jotting down the journal entry as well. Step number 3, journal entry. It can be either impairment loss debit in the P&L account of rupees 100 lakhs, and then we credit asset to asset 100 lakhs. So we're reducing the amount of asset by 100 lakhs, or alternatively, you can also have impairment loss in the P&L debit and credit accumulated impairment. Just like how you credit accumulated depreciation, you can also credit accumulated impairment. All right, so this is going to be the journal entry. And although the question did not ask, let us still calculate the revised carrying amount after impairment loss. All right, what is the revised carrying amount after impairment loss? It will be original carrying amount less impairment loss that is recognized, which is equal to 500 lakhs less 100 lakhs, which is equal to rupees 400 lakhs. So the revised carrying amount is going to be equal to 400 lakhs, which is again equal to recoverable amount itself. All right, it's equal to recoverable amount because we calculated the impairment loss in such a way that the revised carrying amount, or the carrying amount of the asset after impairment, should actually come down to 400 lakhs. All right, so that is the revised carrying amount. Let us quickly see the institute solution as well. So we have an impairment loss of rupees 100 lakhs, and the journal entry is impairment loss debit 100 to asset 100 lakhs. All right. And the second entry, which also you should write in the examination, is where this impairment loss is being transferred to the P&L account. All right. Impairment loss is being transferred to the P&L account to the tune of 100 lakh rupees. All right. So that is with regards to illustration number 13.